Well, a stellar set of numbers delivered by the gas company Mahanagar Gas Limited, MGL. Now, this is a spectacular set of numbers where the company has managed to deliver and beat by a handsome margin consensus estimates, street estimates, as well as the polls. Now, when you're talking about this particular quarter, it was expected to be marred by the COVID lockdowns, also the anticipated increase of the gas price hike that is expected, and also the multiple negotiations that the companies are having with the various OMCs in terms of the trade margins. Now, despite all of that, the company has managed to deliver a clean beat across the consensus as well as the street estimates. When you're talking about the core revenues coming in at close to 667 crore, jumping up almost 141% or jumping up almost 2.5 times on a year-on-year basis. Core EBITDA that the company has reported has come in over 300 crore, going up almost 4 times on a year-on-year basis. EBITDA margin coming in very strong at 49.4%, well ahead of the street and expectations. The profitability going up almost 4.5 times, and again, this is something that has been a beat both on a sequential expectation basis as well as on a year-on-year expectation basis. Whole host of brokerages along expected lines have been quite enthused by the results of MGL. Nomura has maintained its buy stance, kept the target price at 1,300 rupees a share. They are saying that the company has managed to deliver a very strong Q1, mainly based on better volume that the company has delivered and reported, and stronger margins. They are saying that it has been a good first quarter for the company despite the impact of COVID-19 lockdowns. They are saying that the earnings beat delivered by the company was driven by both higher volumes as well as stronger margins. Overall volumes were up almost 115% year-on-year, down 17% sequentially due to the COVID-19 lockdown. So again, COVID-19 lockdowns impacted mobility, impacted the movement of vehicles, thereby impacting volumes for these companies in a significant manner. But despite that, the company has managed to beat the street expectations and has kept margins quite high. Now, why are margins high? They're saying that gross margins that remained at record high for the company, mainly on back of the fact that these companies, especially MGL, took a preemptive price hike, and this particular preemptive price hike was taken in the retail segment, both CNG as well as domestic PNG segment, and this was taken in Feb 2021. Remember, gas prices are expected to rise from October onwards. Steep 60% hike is what is being expected, and most of the analysts were earlier worried whether these companies could pass on the price hikes. Some preemptive price hikes are taken. Analysts as well as brokerages are quite confident that they would be able to pass on these price hikes to the end customer by taking price hikes themselves.